welcome once again to Razorpay FTX 26. Keep the energy going through the day because you're truly going to need it. And without further ado, it's my privilege to introduce our first speaker for today, a leader who has helped shape India's modern story of growth and innovation. Over the past decade, he has been at the forefront of some of India's most transformative initiatives. As the former CEO of Niti Aayog and India's former G20 Sherpa, he has championed bold ideas that have accelerated India's digital economy, from enabling the foundations of Digital India to supporting the rise of startups and innovation across the country. His work has helped create an ecosystem where technology, policy, and entrepreneurship truly go together to unlock opportunities at an unprecedented scale, something the fintech community is deeply and actively building on. Today, he'll be sharing his perspective on one of the most important forces that are shaping the future of our industry, artificial intelligence in fintech, and how AI will redefine everything from financial inclusion, risk intelligence, to the way financial services are built, scaled, and experienced. Ladies and gentlemen, with your help, please help me welcome to kick off FTX 26 on the session AI in Finance in our first executive address, the one and only Mr. Amitabh Kant. Everyone, a big round of applause.
I didn't know that Bangalore had this excessive degree of security required. I'm truly delighted to be here. This FinTech Experience event in 26 is being held at a moment of time when the world is going through its, to my mind, the biggest period of turmoil and disruption. There are three key challenges before the world. First and foremost, the world is very different from the world that has seen growth and progress since World War II. The relative period of stability, which enabled several countries to grow and expand, has come to an end. And this period of stability has been replaced for the first time by conflicts. You're seeing a war in the heart of Europe for the last 4 years. You've seen over 350,000 people dying in Europe. And we must all be very clear that the First World War was fought in Europe, the Second World War was fought in Europe, and you're seeing again another conflict for the last 4 years. You've seen conflict in the Middle East, where more people died in Gaza than in Europe. And you're seeing turmoil in the Strait of Hormuz, in Iran right now. So the period of stability post-World War II has come to an end. The institutions which enable the stability, the United Nations, the Security Council, and later the World Trade Organization, have all become irrelevant because of their inability to evolve with time. So the first feature is a relative period of stability has come to an end. International institutions have become irrelevant. And the second is that if you look at the history since post-World War II, basically there are 3 countries which have driven global growth in a very big way. Post-World War II, Japan grew at rapid pace, close to about 9%, 9.6% growth for over 2.5 decades. You had Korea growing at about 10.2% for close to about 3 decades. And in recent times, you've had China at a scorching pace of growth of 10.2% for over 3 decades. You've had a smaller country like Singapore growing, but amongst the large countries, these are 3 big countries which have grown. All other countries of the world got caught in the middle income trap. 108 countries of the world have been caught in the middle income trap. And the challenge for India, that is the vision which the Prime Minister said, moving from a $4 trillion economy to a $30+ trillion economy, means that your GDP has to grow 9x, your per capita income has to grow 8x, your manufacturing has to grow 16x. Now, these 3 countries could grow at that scorching pace of growth because global value chains were working, global supply chains were working. You could export inputs and components, you could do manufacturing and penetrate global markets. Japan could penetrate global markets, Korea could do that, China could do that. When India starts its long spurt of growth, global value chains and global supply chains are completely broken. And global trade is being replaced by friend-shoring, trust-shoring, working with technology partners, bilateral relationships, regional relationships, but world trade has collapsed because of this. So, the war in Europe, the war in Middle East, the Iraq confrontation and its implication on oil supplies always have long-term repercussion on growth, global growth. And the global growth is at its lowest since the turn of World War II. Now, in the midst of all this, India's ambition is to be a developed country, a $30+ trillion economy. But while there is conflict, there's breakdown of supply chains, we are sitting in this room at a moment of time when the world is seeing the biggest rise in productivity. We're sitting at a point of time when the world is going through its biggest transformative phase on account of data, machine learning, and artificial intelligence. And artificial intelligence will transform lives of citizens in a manner in which the Industrial Revolution, in which the rise of electricity, etc., it'll do it in a 10x bigger manner because it's a general purpose technology which will permeate every single sector of the economy. And therefore, my belief is that the world is being disrupted by geopolitical shifts, by conflicts, but it is being progressed by AI in a very big way, and the AI will bring the biggest productivity disruption. But it's important for us to realize that if AI has to be a positive force of disruption, all of us need to make it fit for purpose. Now, if AI is going to cause more inequality in society, and we should all be very clear that there is only one country in the world since World War II which has been able to retain its global share in GDP. The share of Europe actually came down from 30% to less than 14%. But the share of United States of America has remained at close to 26% of GDP. Its market cap has been close to 50% of the market cap with just 4% of the population. only country which has been able to do this. The biggest beneficiary of free trade, unlike what Trump says, has been the United States of America. Make no mistake about it. But America created a highly inequitable society. It did not build safety nets. And therefore, it's important that if AI has to be a force of productive disruption in India, it must be fit for purpose. And when I say fit for purpose, it must be made accessible, it must be made affordable, it must be made accountable. And AI cannot be fit for purpose if it is not multilingual, if it is not based on contextual data, if it is not low bandwidth, and if it is not democratized in a country like India. And therefore, AI will be a force of good. AI will be transformational in India if the benefits of AI are able to make India technologically leapfrog by transforming the lives of citizens. It is the biggest force of productive disruption if we can transform learning outcomes, if we can improve health outcomes, if we can improve nutritional standards, eliminate stunting and wasting amongst the citizens of India, and if we can use it for purposes of a huge fintech revolution. And to my mind, this is really the key, making it accessible, affordable, and accountable, and making it multilingual in nature. Secondly, while we talk about transformative role, it is important for all of you to realize that AI is an energy guzzler. AI today consumes more energy than Japan. In 2 years' time, it will consume more energy than the entire country of India. And therefore, data centers, which are the computing brains of AI, need to be powered by round-the-clock clean energy through storage technologies and something which India has liberalized now for private sector play, the small modular reactors. And therefore, it is critical that this is a massive opportunity to bring in huge power sector reforms, to optimize the entire national grid using AI itself, and AI itself can optimize the water consumption of data centers. We can do chip cooling, and there are several examples of AI solving for itself. So, ladies and gentlemen, my belief is making AI sovereign, democratized, green, and accessible is critical for India, and we are in the midst of a disruption. But India must stay several steps ahead to ensure that AI remains a force of good, and AI is driven by clean energy. So we are standing at a rare inflection point. We are a country that really leapfrogged credit cards. We leapfrogged ATM machines. We built UPI. And we are now at the frontier of AI-led financial innovation. And actually, if you look around, the world is watching India not just as a market, but as a model. What India does in the next 3 to 5 years, and all of you sitting in this room, what you do in the next 3 to 5 years in AI and fintech will be replicated, will be talked about, and will be replicated globally. And this is not an incremental change. AI is restructuring the fundamental architecture of financial services, including credit, payment, insurance, compliance, and wealth creation. All of them are being restructured. And today's fintech story, which has been built on world-class, India's story has been built on world-class public digital rails. We built 1.5 billion digital identity. We built up UPI. We built eKYC, and now consented data sharing. So if you look at India's stories, India's digital public infrastructure stack consists of Aadhaar, UPI, account aggregator, and increasingly platforms like ONDC, which will give India a foundational digital layer. And no other country has built at this scale. All others have closed models. When you get onto Meta, when you get onto Amazon, your data is owned by them. In India, the model doesn't memorize data. And therefore, in a country like India, AI truly sits on top of the stack. And the next leap is not another payment feature, but AI as the intelligence layer atop these rails turning national scale into better credit, safer payments, and radically lower cost to serve the country. I think we should recognize what India already possesses. If you look at this February 26 alone, UPI processed close to about 20.39 billion transactions, worth about 26.84 lakh crores, and about 728 million transactions per day. I'm giving you these figures again. February, one UPI processed 20.39 billion transactions, worth 26.84 lakh crore, about 728 million transactions per day. And this is a real-time map of commerce at a national scale. And our challenge is to convert this data into risk and trust intelligence. This also represents a massive data flywheel, because India has moved from cash to digital transactions at unprecedented speed, and no other country has been able to do this. And when you combine this intelligence transaction is combined with AI, it creates an unprecedented opportunity for personalized real-time financial services. To my mind, the ecosystem is moving in the right and appropriate direction. The RBI's Innovation Hub has launched the public tech platform for frictionless credit with open APIs and plug-and-play connections to verified sources such as Aadhaar, eKYC, even land records and account aggregators. This is designed to reduce friction in data acquisition and verification. It pushes for speedy dispersal and scale lending. All this is crucial because India still faces a massive credit gap, and that is important to understand. The government debt may be high, but the private credit to GDP ratio in India is amongst the lowest in the world. It stands at 50%. In United States, it's at 220%. In China, it's at 180%. In Korea, it's at 198%. So the private credit to GDP ratio has to grow if India has to grow. If India's ambition is to be a $30+ trillion economy, it can't grow at 50% private credit to GDP ratio. And only about 19% of MSME's credit demand is met through formal channels. Only 19% is met through formal channels. And that leaves an estimated 80 lakh crores unmet demand. 80 lakh crore is the unmet demand. And platforms such as Unified Lending Interface, combined with AI-driven underwriting using alternative data, have the huge opportunity to unlock this opportunity. So let us look at this. The consented data economy is no longer hypothetical. Account aggregators have crossed about 24.8 crore successful consents by June 25. This means that data can increasingly move with consent and purpose, and this enables far more precise financial products for households and MSMEs. And my question to this fintech industry is simple and strategic. Will we keep running fintech as merely a distribution channel, or will we build fintech as intelligence? The winners will be those who use AI to do, to my mind, 4 things at once. Underwrite cash flow, stop fraud rings before they spread, collapse costs to serve with generative AI, and make governance a growth driver rather than a compliance tax. And all these 4 must be done at population scale. Don't get into population, do it at population scale. And before I get into this in a little more detail, let me recognize the role of companies like Razorpay. Razorpay is important, it's critical, because platforms like Razorpay are not just payment processors. They are increasingly financial operating systems for business across India. They enable payments, they enable reconciliation, they enable lending and embedded finance in a very single ecosystem. For the MSME economy, which is the backbone of India and is a major job creator, a company like Razorpay acts as the bridge between informal and formal, between cash and digital, and between exclusion and empowerment. So my belief is that the real power lies in the data layer. Years of transaction intelligence will enable AI models that can predict the churn, flag fraud, and personalize financial products on a real-time basis. My belief is that reimagining the way embedded finance is understood, and India is building it faster than almost anywhere else in the world. And the work which is being done in areas such as agentic commerce, powered by NPCI innovation, is an example of how fintech players can lead AI-driven innovation. And I would now turn to the 5 areas where I believe that AI can transform financial services in a big way. Firstly, I believe that we must shift from traditional credit scoring to cash flow underwriting at scale, where decisions are driven by the probability of repayment, volatility, and seasonality, especially for MSMEs that lack collateral and formal balance sheet. So move from traditional credit scoring to cash flow underwriting. And priority should be to productize instant, low-ticket, short-duration working capital and shift from annual reviews to automated limit reassessment daily or weekly. Globally, the proof of concept is clear. The Ant Group's MY Bank, and all of you are familiar with this, the Ant Group's MY Bank built the 310 model, and what it said was apply in about 3 minutes. Apply in about 3 minutes, approve in about 1 second. Apply in 3 minutes, approve in about 1 second, with zero human touch. Zero human touch using large-scale behavioral and transactional signals. And that is the model, 310. 3 minutes to apply, approve in 1 second with zero human touch, 310. A World Bank case study cites an approximately 1% default rate, 1%, just a 1% default rate for MY Bank. I'm giving you this case study because the lesson is not to copy a model, not to copy the Ants model, but to understand what AI can do when it has data. When AI has data, it has scale, and it has disciplined execution, how transformational it can be for all of you. And India's development of public infrastructure can make underwriting cheaper and faster. The public platform for frictionless credit is expected to ease verification of digital data for lenders via open APIs, attacking the biggest bottleneck, which is data acquisition and verification. And this will allow credit to be priced on real risk rather than proxies. So what fintech should do now is execution, execution, and execution. Build cash flow first underwriting for MSMEs. And for God's sake, do not confuse AI with chat. Treat AI models as decision engines. These should combine auditable rules with machine learning so decisions are explainable and regulator ready. And so outcomes can be defended across cycles and not just in good times. Secondly, we must turn India's payment scale into a real-time risk detection engine for fraud, credit, and collections. At UPI scale, the difference between average risk controls and the best-in-class controls is the difference between trust compounding and trust collapsing, and therefore it is necessary for us to turn payments scale into real-time risk detection engine for fraud, credit, and collection. And if you look at the global benchmarks, you'll get the direction. Visa reports that its risk organization blocked $40 billion in attempted fraud, $40 billion in attempted fraud. Investigators increasingly use generative AI for correlation and graph analysis to identify complex relationships and isolate true positives. And this is exactly the kind of tooling needed to fight organized scam ecosystems rather than one bad individual transaction. So what fintech should do now is build graphing technology using behavioral AI to track mule accounts, synthetic IDs, and scam patterns tuned to India's rails. Create a shared consortium-style fraud intelligence layer using pooled privacy-preserving signals, and stop treating fraud as a binary or approval or reject switch. Treat it as a risk dimension that can be priced, limited, and controlled just like credit risk. Third, we must transform cost to serve with generative AI. This is not to replace humans, but to redeploy talent to revenue, risk, and customer outcomes. You have global proof, which is visible to you. Klarna reported that its AI assistant handled 2.3 million conversations, and that is 2.3 million conversations was equivalent to roughly 700 full-time employees, cutting repeat inquiries by 25% and reducing resolution time from 11 minutes to less than 2 minutes. And India has special advantage here because voice-based and multilingual AI can unlock onboarding, servicing, and grievance redressal at scale, especially for new credit customers, and then inclusion will become operationally visible rather than simply one slogan. So my view has been that fintech should do now is to deploy AI co-pilots for agents and automate Tier 1 and Tier 2 issues such as status queries, disputes, chargebacks, and EMI queries. You should support interactions through hardship flags, dispute propensity, and scam susceptibility. Fourthly, in my view, in the RBI-led consented data economy, their model is to win on conversion and relevance and not just distribution. So more than 100 million successful account aggregator consents as of August 24. What we are seeing is extremely rapid consent growth across India. This means consent is now become a scalable product, and a scalable product with capability and not just a compliance feature. So global scale examples show that AI combined with digital rails can be transformational. Just to give you one example, China's digital private bank, WeBank, its sites serving more than 400 million customers. 400 million. WeBank sites serving more than 400 million customers and over 5 million MSMEs applying for loans. 400 million customers, 5 million MSMEs applying for loans. And again, the point is not to emulate, but to appreciate the trajectory when underwriting, servicing, and distribution become your algorithmically efficient at mass scale. So what fintech should really do is now to treat the account aggregator consent flow as a conversion funnel, reduce drop-offs with one consent, many offers, using eligibility pre-checks, build the next best product systems and dynamic limit systems that refresh offers using new consented cash flow data. Ladies and gentlemen, my view is that operationalize simple logic. It's important that periodic health or education spending suggests embedded finance, embedded insurance or EMI products. Risk-sensitive customers will need secured or low-limit starter lines. But the crucial nuance is this. It is not marketing. It is data-driven personalization tied to verified finances. And it's important that as AI decision-making expands, the biggest competitive advantage will be good governance. I would say that stop treating RBI compliance as a cost and build regulatory tech by design. Winners will be those who can prove fairness, explainability, audit trails, and data minimization without showing product velocity. Regulatory tech would mean that by design means your product can always answer quickly and precisely what decision was made, why it was made, what data was used, which model version made it, whether the decision can be reproduced later, whether it is fair and stable, and whether a human overrode it with a logged rationale. And scalable AI in finance must also mean scalable accountability. So what fintech should do now is to build model governance as code, version data sets, reproducible decisions, bias monitoring, and human override logs should be built into the products of governance system. My view always has been that India's fintech advantage is not just UPI scale, but the ability to combine scale, rails, consented data, and domain AI to build the world's most inclusive and the most low-cost financial services stack. This RBI's free AI report, I went through it and I thought that the key strength of it is that it adopts a principles-based regulatory approach rather than a restrictive compliance framework. So, ladies and gentlemen, payments were actually India's first leapfrog. Then came credit, then came stock markets, then came insurance, all this within 30 to 60 seconds on the mobile, on the go. My view is that AI-driven finance is the second, because AI makes it possible to deliver instant, low-cost, high-trust financial services at population scale, and the mandate now is only execution by the FinTech of India. Build the intelligence layer, build the trust layer, and build it for India's full diversity at India's full scale and make it multilingual. And my view is that if leveraged effectively, AI will accelerate FinTech innovation, it will deepen financial inclusion, it will strengthen India's digital public infrastructure ecosystem, and position, ladies and gentlemen, it will position India as a global leader in responsible AI-driven finance. I wish you all the very best and all success, and may you all become the revolutionary leaders of India. Thank you very much.